Hello, I'm Fred Joy, your host for the Smarter Software Outsourcing podcast, and I'm excited to share the recent conversation I had with Sevan Tuna on the bottom line. In this episode, we discussed my journey from Switzerland to Asia, where I transitioned from a decade in insurance and banking to working with a longtime friend on an e-commerce venture in Hong Kong. This eventually led to the creation of Arcanys in the Philippines, focusing on software development outsourcing for SMEs in Europe and Australia. We also covered Arcanys' growth, expanding from a small team to 350 employees supporting tech-enabled SMEs. Arcanys Ventures, investing in startups by providing development team in exchange for equity, resulting in 23 investments and a successful exit. Building community and culture, retaining top talent in the Philippines and fostering a positive work environment with initiatives like our CrossFit gym. This episode is packed with insights on scaling a tech company, strategic investments, and fostering a vibrant company culture. Listen to the full conversation here, and thank you for tuning in.
Fred, thank you so much for joining me on the bottom line today.
Hi, Sevan. Thanks so much for having me.
I'm excited to have you on the show. We haven't had someone like yourself with your background. So before we get into it, tell us a little about yourself, how you got into business and just your journey.
Sure. So I'm Fred. I'm Swiss initially. I moved to Asia in 2009 after insurance and banking career for about 10 years. And in 2009, I joined a high school friend of mine, Alan, with whom I partner on an e-commerce venture in Hong Kong. And about a year after we started, we had an opportunity to buy a small business in the Philippines in the same industry as we were in the e-commerce and gaming industry, which made us move our whole business operations from Hong Kong to the Philippines. And about a year after that, we started having some of our friends asking us to help them with software engineers that we were I'm starting to hire for ourselves, but also we're talking really highly about, their skills. And so that's like 15 years ago. And, and then, so we started focusing solely on that because the e-commerce venture wasn't very promising anymore. The gaming industry had changed, so we had to find something else, and we had this opportunity to do software development outsourcing. So that's how we started helping SMEs in Switzerland, in whole parts of Europe, and then Australia as well. And that's what we've been doing for the last 15 years. Today, we have around 350 people working with Arcanys. We're helping mostly tech-enabled SMEs, SaaS businesses in Australia and Europe for the most part. And about 7, 8 years ago, while we were helping these SMEs, some of them were raising funds and asked us if we could participate in a fundraise, or companies we really liked working with were telling them, hey, if you guys raise funds at some point, maybe we could help you out with a bit of a particular way. Instead of giving cash, we would simply, provide you with the people for free in the sense where they wouldn't have to pay us, but we would take equity for that. And so that's kind of how Arcanys Venture is born. And to date, we have around 23 investments. We've had one exit with an Australian business sold to Asics, the shoe company. And in the last 2 years, we've accelerated all that part of investments. We've had recently um, um, we recently made a partnership with Techstars, which is the largest seed fund in the world, where we've invested in three companies together with them. We're kind of accelerating all this investment part because I think we get to talk to super interesting people, work on really amazing projects. We actually have one that is helping swimmers improve their strokes as they swim, and the company has provided these devices to three of the swimmers that actually won medals in the Paris Olympics. So we're super proud of having been participating in that. And so that those are the kinds of things that make us wake up and do our things every morning.
Amazing. You said you help tech-enabled SMEs. Can you define help a little bit more? So, what is it
Yeah.
that you do to help? So, just dive a little bit deeper into those services.
Yeah. So if we're looking at the paid services part of the business, we a lot of companies in Australia and in Europe are struggling to find software engineers quickly and at a rate that an SME can afford, because usually engineers are hard to come by and they receive competing offers from Google, Canva, and all these companies that can pay really top dollar to get them. So it gets really difficult for SMEs who don't have an unlimited budget and need to get stuff done now rather than tomorrow. And so a lot of them are looking at alternative options than on the local market. So then it comes to outsourcing or offshoring or nearshoring. And one of the benefits in the Philippines is that there is a wide market of software engineers. They are highly English proficient. I mean, it's the best English speaking country in Asia, and the rates are really interesting. And the thing is, we can pay top dollar to get top engineers that are still very affordable for countries like Australia or Switzerland or and so on. So um, our job is to find really good skills for these companies rather quickly, and then keep them on the long term, because we're looking at long term partnerships, because companies are building entire teams with us, and then of course they want the developers to stay as long as possible to keep the knowledge and keep on improving and yeah, getting better every day.
Do you have a one-to-one arrangement? So do you guys, when you build a team or an SME goes out there and you support them in building the team, do those employees work directly with the company? You let them run it, or do you help facilitate that software developers? Do you get involved in the process, or is it purely just talent acquisition, getting the
Yeah.
right talent for the purpose, and the SME runs with the talent and does what they need to do?
So it's a bit of a mix in the sense where we provide the talent they need and they manage the day-to-day tasks, if you want, but everything else related to HR and motivation and all trainings, all that stuff is run by us. And uh, the reason is that we know how to keep Filipino developers happy, motivated. There's a lot of work to do in the background, and in some cases we also come in and help companies improve their own processes. So because we're working with more or less mature companies, so some really know how to run their software engineering development lifecycle, so there's nothing much we can help there. But the majority can benefit from our experience, having handled hundreds of projects and looking at all sorts of issues that can come across, and then we come in and try to do a bunch of analysis and trying to help them smoothen their processes, improve the requirements, and so on. So it's a bit of a hybrid approach. And basically we succeed only if the company succeeds, right? Because if they grow their team, we're all winning. It means they're doing great, that we're doing a good job for them, and then we're benefiting from the growth of that business. So we try to do everything we can to make them more efficient and succeeding in their projects.
Amazing. Now, you talked about Arcanys Ventures investing in companies via whether it's providing the talent and so on. One of the
Yeah.
things I wanted to dive deep into a little bit, you wouldn't just invest, at the end of the day, you're still investing money and time. I want to talk
Right.
about your view on uh, what are the things that you look for in a company and go, that's one, I'm prepared to do some free work in lieu of
Yeah.
equity, knowing that the payback may be never or may be great. So
Yeah.
can you sort of dissect to us the really cool tech businesses that you've made some punts on and the reasons why you've done that?
Yeah. So What? So we are looking at companies that are in the late seeds to pre-series A kind of stages. So they're fairly early, but they have found their product market fit. They are generating revenue, and they have a solid team in place. And they are kind of ready for growth. And that's where we come in because we know growth is hard. I mean, scaling a team is really difficult, and that's what we know how to do, and we can bring them to that next level. So that's kind of like the phase we're at. We look at SaaS companies or heavily tech enabled companies, or sometimes hardware companies that have struggles to develop their software component because some are really good at building the software, but their hardware. But then when it comes to enabling themselves to deliver their services through a platform becomes difficult. So that's kind of the first thing. The second, we're looking at how is the team composed? How many founders? What are their expertise? So we're not looking at usually fresh grads that come out of school. We're looking at people who have been around, understand the industry they're tackling, or have some serious experience. So that, and then after that, I think it's really like, do we like the idea? Do we feel like it's something would be I mean, interesting in participating in? And also, do we think the developers would enjoy working on that project? Does it have a purpose? Can they identify themselves, or can they grow over time in this project? And we've been lucky to to work on a lot of diverse projects that range from fintech. We have one fintech in Melbourne that's doing great, and we're super proud to be working with them. And we have the company that's doing these devices for Olympic swimmers. So we're super happy, and we've learned like a few days ago that the some of the athletes that were using their devices won gold medals, including one that never had a medal, came from nowhere and just got a silver medal. That was like, we're like, oh, maybe it was just because of that, like, which probably is not the case. But we're working also on some exoskeleton projects to help with rehab. We're just invested in a Texas company that is doing stuff for reproductive health for women. So there's all these really cool things that are coming up, and that we're super happy to be working on because it's new stuff, and trying to change, I guess, the world for the better.
Yeah. Um, One of the things we do talk about on the bottom line is businesses that don't succeed.
Yeah.
Obviously, with your talent acquisition for the software engineers and also the investments you've made, you would have seen these tech startups that don't make it. In your
Yeah.
opinion, what are the key fundamentals of why you believe a SaaS tech startup business fails? Yeah, can you
Mhm.
share what your
Yeah.
experiences have been with that?
So one of the main things that we've seen is, because we've had a few companies in our portfolio that have failed, and the thing that we've seen is that if it's a solo business founder launching himself into a tech startup with a heavy software component, it's very very difficult. And so that's why when we're looking at a team, I mean, at a company to invest in, we have to make sure that there's at least someone that has the tech responsibility, that has a really huge incentive to succeed. So it could be a co-founder, obviously, but it could also be some key technical person that gets skin in the game, such as a bit more equity, or stuff like that. So that's kind of like the first thing we've seen is the lack of technical experience with someone who really gets their hands dirty. Because if you have someone too high level that just does the strategy and stuff like that, that's not what the startup needs. You need to get down and roll up your sleeves and get working with the team. I think one of the other parts is, one mistake when raising is to raise solely for technology. We're looking at companies that are raising, of course, to build the tech, but also banking enough money to go after sales or marketing, because it's never just a one thing, right? You have to have money for a bit of everything. So those are, I would say, like the two main um, problems we see. And then another one would be to raise at a too high valuation with unsophisticated investors, because then when the startup is starting up and then you come up with a too high valuation with sophisticated investors, they will just pass on you, and either you have to do a down round with everyone and piss off the initial investors. So it's all about finding the right balance of trying to get uh, as little, or to give out as little equity as possible at the start, but get enough money without having a crazy valuation, and really prove some traction, and then you can go and raise more money. So that's, I mean, the basic advice that would probably give to people who are raising for the first time.
You talked about valuations and crazy valuations. Being an accountant, we have a division that where we support our clients and non-clients to do some valuations and appraisals of their business. The ones that are the craziest are the tech startups or the tech businesses that have started up and they're away and they're on their journey. And these guys come up with some valuations that I kind of look at it going, that's a bit out of control. Can you
Yeah.
sort of share with our listeners just some examples of how tech businesses get valued, and just give us examples of what you would define as crazy? So you can put a hypothetical here. So you could say, okay, imagine a startup XYZ that has no revenue, has built the software, maybe gone through beta, and they valued it at 20 mil because, just make up. Can you tell us some hypothetical of
Yeah.
where you see the appropriateness and so on?
So usually at the level we come in, it's more of an art than a science, right?
Yeah.
Because there's little revenue. But what we look at is, okay, where are you with your traction? What can you show us? And then it's also um, kind of understanding how much money have you put in to get to where you're at, and then is this valuation related to how much money you have put in already, because some have burned, let's say, $3 million. I'm just making up numbers, right?
Yeah, yeah.
And then they're like, oh, we're raising at 15 mil valuation, and but we have no revenue yet, but we need to justify this valuation for all the people who have put the money in earlier. But the bottom line is, well, your business is maybe worth 3 million, and so then it's about having a hard conversation with the people who put in the money first and all that stuff. But when you start having revenue, that's when you can look at some of the more traditional metrics, of like how many times of the revenues is the valuation, and all that stuff. But we rarely lead around, so we're not there to set the valuation for them. We look at, okay, how are the other investors looking at it, and do we feel like it's a reasonable valuation? So we're not the pros at valuation, but we just get a gut feeling um, of is does can we I mean, is there anything we can do here to have, I mean, a decent return on our investment, and is it not too risky?
Yeah.
uh, so yeah, no hard science here really, versus what you guys do, right?
Yeah.
So
Well, with the founders, you touched on founders a couple of times. I find investing, especially in startups, whether it's tech or not, the leadership team and the founders are really important. What are the things you look for in the founders? You mentioned you like to have more than just one founder driving the business, but
yeah.
what character capability do you look for in the founder before you go and make the punt?
So yes, I think the industry experience is one of them. Is also, because we don't come in at the first stages, is how has he financially handled the first bit of funding? How did they spend the first money? Was there any mismanagement in the funds raised? So because that gives us a lot of interesting information or red flags, um, to see what's coming in the future, right? So that's also one thing. um, and it's basically, how did they compose the team? Is it a team of managers that are just bossing people around, and it's a lot of business versus a lot of business people versus the tech people? What's the ratio between people doing, working on the IP, working on the product, versus people trying to just sell stuff? So there's no magic formula, but we are trying to look at who's doing what in the business, and it is this, well balanced between the team members, and what are each one of their credentials and what have they done in the past. Yeah,
Yeah.
more or less. Yeah.
Awesome. Now, you formed partnerships with 21 startups and celebrated a successful exit with ASICS, the shoe company.
Yep.
Without naming names, can you share some details about that journey and what contributed to the success?
So that was a bit of a particular case, because the company that exited was, like a race registration SaaS in Australia, and they had the, I think, the biggest market share. And the company's name is Register Now. So if people who are running listen to this, probably they're still using it or have used it in the past. But basically, what happened there is, this business has been running for, I think, many years, and we were improving the technology to offer more features, and then COVID hit, and then the revenue basically went down to absolutely zero. And they were facing, like, I mean, they were facing bankruptcy, if there was no, I mean, help coming in, and they had to downsize the team and everything, and they had 10 people with us. And so basically, they also knew that ASICS wanted to acquire a player in Australia, and then they came in and I think tried to lowball them during COVID, because they were kind of going broke, and they were like, so we can purchase you for like peanuts and stuff like that. And so that's when we talked with the owner. We're like, hey, how can we, keep on building stuff, showing you're strong, um, get you through this? So that's when we started investing with them. And just as things started, going back on track at the end of 2021, I think, that's when they managed to exit at a, I think, 3x higher valuation than when they got their first offer. That's what I remember. Maybe I'm mistaken, but it was substantially more. And the founder said, yeah, I've struggled enough with that business, so I think now it's time to exit. For us, it was a short investment because it was done in 8 months later we had sold it, but it was a 40% um, upside for us. So I think it was the best for everyone. Now we're looking at other exits, and we're looking at one substantial exit in the next 2 months. So our investment made an offer to a bigger company to get acquired, um, and we're hoping this goes forward. And then if this goes forward, it's a 10x on our initial investment that we made, and I think it's going to prove the model that we're running at the moment to help us, go a lot further. So that's the story so far.
Amazing. It's so good that you're contributing to the tech startup world. It's a lonely journey starting a business, especially when it's a business where you don't know if there's a market. You're exploring, could be innovative. So it's great that you do that. Now I'm going to try to think of a question. I'm just going to pause here.
Yep.
What can I do? Okay, we talked about exits. I want to maybe take this to an exit. Fred, obviously, there's always an exit strategy for businesses. Sometimes the exit strategy might be I'm going to run the business till I'm 65 and retire.
Yeah.
And some want to exit much sooner than that. For a tech startup that started from, zero and got it to a certain valuation, what advice do you have for founders where they're thinking about an exit? Because I find in Australia, some of our tech startups just exit a little bit too soon. They see, millions of dollars, but they're only early in their stages. Do you have any advice to our community here in Australia and our listeners as the thought process you should take to ensure that you exited at the right time?
Um, I don't think I'm the best suited to do that, and the reason is when we built the business, we never wanted to exit. We wanted to enable other companies to use our engine, if you want, to build businesses. And so I think the thought about the exit came just a lot later in the game, and we are not advanced enough, I think, in our venture journey to for me to be able to give much advice on that end. I think it has to make sense with the priorities people have in their lives and why they build the business in the first place, right? And I think a lot of people maybe start the business and just think they're gonna sell it for millions of dollars 5 years down the road, and that probably happens. Probably that's when it happens a little too early. um, and some others just discover that actually it's a super interesting journey and keep on being super fulfilled by the job. So maybe things change over time, and I guess the time to sell is when you don't like what you're doing anymore and you're tired of it and the numbers look right. Then that's probably when uh, when you gotta get out. I don't know, I haven't been there, so I can't I can't say more.
Oh, thank you for your advice. Now, you've invested in businesses around the globe, and you have businesses not only through providing talent but investment in Australia. How does the Australian startup ecosystem compare to other global markets?
So I think we can compare the US to the rest of the world in terms of the valuations, for example, if we're looking at that. And that's particularly why we're not in the US, because the valuations are the multiples are just so much bigger and less interesting for us. When we look at the Australian market, what we the reason why we really like working with Australians is people are down to earth, they're very entrepreneurial, and they're trusting. So they give it a go, because we have a model that's a little different than other VCs, if you want. But when they see the opportunity for us to help them out, they're like, okay, let's give it a try. Like the worst is we waste a bit of time and it doesn't work, and we can move on. And so we've always really liked, almost everyone we spoke with had this entrepreneurial spirit and just wants to try things, and then this win-win kind of mentality that I think is great. And I think what we've seen as well is that Australia, for many startups, is a nice starting ground because it's a bit of a contained country, English speaking, um, very entrepreneurial. So it's nice to launch there, and then it's a great place to grow from to other countries. So that's how we see it.
And in terms of technology, are there any particular trends or sectors that you particularly are excited about right now?
So the health tech sector is booming. I think there's so much to do, either with devices, enabled devices. I mean, we see the watch, there's the rings and stuff like that, and the stuff we're doing for the swimmers, for example. So I think this is pushing a lot. We also see that because we're connected with one of the best technical universities in Switzerland with super high profiles, PhDs and stuff like that, and we see that's like it's growing so fast, and that's an interesting play here. So I think the health tech sector, there's always fintech is also going really well, because I mean that's where the money is at the end of the day. So we see that. And what's what other things are coming? Yeah, I think that's the two main ones that we see really is the health tech and the fintech part. Yeah.
Awesome. And let me have a look. Okay. Um, what are the biggest challenges you see with investment in the current economic climate? Obviously, the news around the world is inflation and lack of talent, and you're obviously solving that. But what are the challenges at the moment that you see?
Yeah, I think the funding landscape is really challenging at the moment. And when we're talking about inflation, it means also the interest rates have gone up quite a lot. So until a year and a half, 2 years ago, the money was basically free for for everyone, and then so investors didn't really know where to put their money, so they were ready to take higher risks and just pouring stuff in startups. And like, okay, if I get a return, great. If I don't, okay. And then if I lose some, then I guess I have enough money to save for the rainy days. But now it's more complicated. So we see that startups take a longer time to raise money. They have to be very conscious with their valuation. They have to deliver a lot more value to investors for them to kind of decide uh, if they want to invest. So it's kind of leveling the play field for everyone. And then I guess a lot of the really bad ideas and people who cannot execute won't find funding anymore. And it makes everyone just looking a lot closer to the numbers and what have you done, what can you show. Um, so I think it's about, for startups, it's about running a lot more efficiently. We're looking a lot closer at the cash burn, and how much money do you still have in the bank? How do you manage this? How long is your runway? Uh, are you being smart with your money? Uh, so I think everyone's looking a lot more at that. Founders have to be, I think, just better at managing their finances, and maybe talk to their accountants a bit more often.
Yep, definitely got to talk to your accountants. I've got my next question might actually be slot in to earlier in the session. So guys, you might cut and put this at the start. You obviously have 300 staff. They're all software engineers. A lot of business owners that hire software engineers probably aren't software engineers themselves. I assume these candidates are unique in themselves. You've got a lot of experience looking after them. You said we do really well in looking after them. We know what makes them sort of motivated. Can you share with our audience that have software engineers, technology people in their business? What are the things that make them tick, and how do we best manage them to motivate them to do what they're mandated to do?
Yeah. So there are a lot of cultural differences, I would say, in different parts of the world. But I think the main thing that applies to everyone is software engineers are lifelong learners. They want to learn new stuff, they want to learn interesting technologies, they want to build stuff that excites them in a way. And they want to get better at their craft. So it's like they go, I mean, most of them go down these skills rabbit hole and then improve in different areas, whereas other people want to grow. I mean, mostly business people want to go up the, maybe the command chain, or like manage people and stuff like that. I think this is less true for software engineers who just want to become really really good at their craft. So there's that, the technical aspect. There's the growth inside of these projects. But aside of that, I think it's also offering, I mean, at least for Filipinos, it's offering a sense of community, a sense of belonging to the company, and also like, am I making a difference in people's lives with the stuff I'm building? And I think that's a really high motivator. Like I mean, we've seen it over and over again. And so, on the community side, we are super big on health and fitness. So we've built actually a CrossFit gym for our employees that's celebrating its 1 year anniversary this year. We have a lot of common events where people are, bonding events and stuff like that, and a lot of training opportunities as well, right? So we financially incentivize them to spend, I mean, half a day on weekends if they want. training, and then they get, I mean, financial incentives, free food, and stuff like that. And also, now we're also focusing on mental health, trying to give them as much access as they can for mental and physical health as well. So it's like we're trying to make sure that they don't have much to worry about outside of their job, except, I mean, the family life, I would say. But healthcare is taken care of for them. The family growth is also kind of taken care of. They can dictate what they want to learn. That's kind of tied to their work and stuff like that. So it's just about, I guess, giving opportunities for growth in various areas.
Awesome. Now we have to wrap up. Unfortunately, my final question is: do you have any final thoughts or tips you'd like to share with our audience for aspiring entrepreneurs and startups looking to attract investment?
Yeah. So the I think is to get your story in order, get your numbers also really tidy, because what we see is if you don't have a good story, you don't know your numbers, and investors want to see, I mean, the numbers, right? And so that's where we really recommend them to look into on how to present them really well, and that's where they should go talk to their finance people and get their books in order. And that's actually an advice we give very often, and try to help them out with this by putting them in touch with people who can really help them. um,
Yeah, great advice. I look, it is an understated importance. We do a little bit of work in the M&A space, as I said earlier, and what we see some businesses, mature businesses that have got large turnover, and we just see that the financial sophistication in how they operate their business is just
yeah,
not where it needs to be. So
yeah.
numbers are important, and yeah, speak to your accountant. So look, Fred, we've run out of time. Thank you so much for sharing your expertise with our listeners.
Thank you, Sevan.
I really enjoyed the conversations, and I know the
Likewise.
audience will as well. Thank you.
Thank you very much. Thank you.